Hello everyone, this is part 10 of our QuickBooks 2015 tutorial video. In this video, we're going to talk about QuickBooks Inventory. All you need to know about QuickBooks Inventory. So how to enable inventory preferences, difference between inventory and non-inventory items, and how to handle startup balances, and how to add inventory. So we're going to cover all sorts of inventory, QuickBooks inventory in this video. And uh, so let's get started. So now I'm at the home page in here. So first thing you want to do is you want to make sure uh, you have inventory preferences enabled. So inventory preference has to be on. So you can go from here just to make sure it's on or off. So you can go from here, items and services, or you can go from list and select item and item list. So if you click it here, so you go in here, it will say this list, or from your home page, it will take you to the same place. So right here, click this one, it will take you to the same place. And by the way, part 3 of our tutorial video, we cover item list a lot. So that's our full part 3 of tutorial video. That's where you can get all kinds of information related to item list. So you want to check that one out. Part 3 of our tutorial video, you can see it on our website. It's newquickbooks.com, and look for part 3 that deals with item list, and you can also see it on YouTube as well. So the first thing you want to do is find out your inventory preferences on or not. So you need to check. All you have to do is, this is your list, and right click your screen here and click new. So in this case, its inventory part is on. So the chances are when you create a company file, you may not have inventory on. So let's just turn that off first, and we'll come back and deal with this. So I go to in here, and okay, so now let's go back to item list from here. So here's the item list, and you'll see when you right click it, you'll see new. So as you can see here, most likely when you set up your company file, this is what you just see. You will see service, non-inventory part, other charge, subtotal, group, discount payment, and maybe some of the stuff, but basically that's what it is. So if you need more details about other stuff, other types, and need to know how to handle it, so you should check out our part 3. Alright, so it's not here, it's not set up. So now what you have to do is go back to the edit. So right here, this is the edit one, and select preferences. Edit, select preferences, and from the list, so you have a big list here, accounting, bills, and in here you will see items and inventory. So you should see that, items and inventory, and then select company preferences, and then select item, this checkbox here, it will say item and purchase orders are active. So this is the checkbox you want to select, items, inventory, and purchase orders are active. So check this one, and it will basically check other stuff too. So you can check which one you want and which one you don't. Most likely it's the default one, just leave the way as it is. And then you have this unit of measure. So if you're just starting and don't know too much about inventory, so don't worry about this one, you can handle this later on. So this one is for, let's say you buy quantities like you buy 1 dozen and you want to sell in 1 piece at a time. So buy 12 and you sell 1 unit at a time. So this is where you come in and set up as you want it. So at this point you don't want to do anything because you're just starting. So once you have some expertise in QuickBooks inventory, then you can handle this one. So right now, inventory right here, just click OK. And now if you go back to list, item list, and right click it, new, so now you'll see inventory part and inventory assembly added, and you have non-inventory too. So the now question is, what's the difference between inventory versus non-inventory item? So let's just start with the non-inventory one. So in non-inventory, you don't want to track inventory, and when you buy it, you just want to expense it, the cost of goods sold. Buy it, expense it, the cost of goods sold. That's it. That's the end of the story. It will show up in your P&L. Whereas inventory, you add inventory, and it will go to your inventory asset or your asset as your on your balance sheet. And then when you sell it, sell inventory or inventory part, it will reduce it from your inventory asset account, and then it will create revenue. So we will go through that when you set up add inventory, but that's basic. That's the basic difference between non-inventory and inventory part. All right. So let's just create non-inventory one first, just for reference here. Okay. So this account is for income account. So if you want to expense it, so you have to click this one. It's the both. The item is used. Purchase as well as customer job or revenue type. It's selling inventory. So you have to click this one. You'll say right here, the item you use in assemblies or is purchased for a specific customer job. So just click this one, and when you do that, it's basically you'll have a choice of selecting the expense account. So in this case, you want to select like a cost of goods sold account right here, the cost of goods sold. So that way it will track, although it's tracking uh, parts at the inventory level. This is still your part, and you will show you will see your cost. How much the cost for all those non-inventory parts. So that you need to select the cost of goods sold account here. Okay, so let's say this company, the PC computer store, they buy parts, computer parts, and they also buy a bunch of computer components, and they sell computer, they make computer, that kind of stuff. Let's just say you bought some wire here, computer wire, and you don't want to track it, so just expense it. So let's just say you don't need to put any cost in here because the cost may vary and you're not tracking anything anyway. And if you are so this is all you need to do. And so let's select the cost of goods sold, and so the income, if in case you do this, there's a say okay. So they need you to specify the income account. Just select merchandise sales. Okay, although you may not sell this, it's basically non-inventory type. Sometimes you may sell it, so just click it like this. So now you have a computer wire. So you got to put the description too. So edit here. Just say computer wire in here, and in here, this is the one. It goes to your invoice part, and if you want to indicate the manufacturer's part number. So this is one helpful when you place your order, create purchase order. You need your part number, not your part number. So this one could be just a part number too, for computer part number, whatever you SKU it, and this one is manufacturer's SKU number. Okay, so you can put any number you want, just leave it blank. So click OK. So that's your non-inventory one. So this one is basically when you want to buy it, you just want to expense it. Let's say you want to you buy, you just bought it something here. So write check. Okay, I don't have anything in here. This is the computer store, and let's say you bought some parts from some vendor. Let's say this is let's say San Diego PC supplier. So that's your vendor. Just click this one, and So this is a non-inventory part. So you always have to select this one, items. So select this one, and basically you select computer wired here, and let's say you buy 10 for $50. So your cost is 500, and so the save and close. Basically, that's the end of it. This one. Okay. So if you go to your P&L, you will see something in here. See, as you can see here, the cost of goods sold is $500. So the moment you buy it and enter the transaction, it will show up in your cost of goods sold account. All right, so that's non-inventory type. All right, so almost put that. So we're done with the inventory, a non-inventory part. So let us deal with the inventory part here. Okay, so right-click it here, and new. Okay, and select inventory part. Okay, so this one is kind of blank one, so we can there's nothing in there. So we are doing from scratch in here. Let's say this is a computer store, and they want to buy, they want to stock few computer components. Let's just say the first one is graphics card. All right, so graphic cards. So you'll have a SKU number in here. In this example, I'm just saying graphics card in here. So normally you'll have a SKU number. You want to create a SKU number in here, and you will want to assign manufacturer's part number too. It's very important. So when you place an order, you're creating purchase order. This is the one you want to use. So manufacturer's part number. All right. So as you can see here, uh, so this is the cost of goods sold. You don't want to do anything in here. It's already selected. Okay, and in here, sales price. So this is the one, it will show up when you create an invoice. So let's say for this example, we're gonna sell this for 90 bucks, graphics card, and the cost is $70, like this. All right, and uh, so the inventory asset account is the default one. You don't need to change this one unless you're an expert and you know what you're doing. Otherwise, just leave this alone. Don't touch this one. All right. So on hand is at this point is 0, and so this is the date in here. All right. So income account, you got to select one. The preferred vendor, if you have one, that's fine. If not, no need to worry about it. So this is basically if you have one preferred vendor to buy this part. If you have multiples, then you can't do very much. So just leave this one empty. Okay, so the income account is a merchandise sales. This is your income type account. Just select that one, and then you click OK. So basically, it's the saying is your cost is $70, and your sales price is $90, and your markup is 20 bucks in here. Okay, so when you sell for $90, it will create your revenue for $90, and at the same time, it will also post cost of goods sold at cost or average cost. Right now, there's nothing in here, so if you create invoice right now, it will create sales at $90 and cost $70, and also negative inventory because you don't have any cost in here. All right, so click this one. So it's basically you have, this is how you set up your inventory. You have to have a cost, or if you don't know the cost, you can just leave it blank. And if you know the sales price, you have to enter it here. This is the one it will show up when you create the invoice. All right. So the cost is, it could be 0 at this point if you don't know anything. So the cost is, this is on the average basis. So it will calculate an average basis. When you enter the actual bill, it will create the total value of your product line in here. So let's see what happens. So click OK. All right. Okay, so now you got the graphics card. All right, so now you want to buy it. Enter bill. So it could be interbill. So if you are buying it on terms, you'll be interbill, or if you're just paying it, writing check, paying by debit card, writing check, it's write checks right here. And if you're paying by credit card, so you'll be into credit card. So they all have a screen that you can select items right here. This is the item one, so not the expense one. So there's a difference here. So expense, it goes directly to your chart of accounts, whereas the items, it will post to your item list, as you can see here, item list, and then the when they post it, it will from item list they will post to your chart of accounts, indirect link here. Okay, so let's just start with this one. Let's just say you don't want to write it. Let's say just write a check, or it doesn't matter, or I will do both. All right, so the pay to the order of let's say this is our supplier for everything for now. All right, so let's say graphics card in here. So graphics card. All right, so let's buy 10. See, you have cost in here because we entered the cost in there, $70, and if you put it 10, so the cost, so it's 700 total price in here. Okay, so save and close. All right, and then the next day, this guy came on, the vendor came, hey, if you just bought 10, if you buy 20, I'll give you some more discount. The San Diego PC supplier. Just, and don't pay me until for next 30 days. So give terms for 30 days, and said, well, I'll give you a good discount if you buy it now, if you want to buy 100. So let's say I'm gonna sell it to you for 60 bucks. So now it's 6,000, 100 pieces, $60, and 6,000. Remember the first one, we bought 10 units at $60. All right, so 6,000 here. Okay, and so the reference number is your invoice number. Let's say your invoice number is 12345 6. So that's your invoice number, and net 30 terms. Okay, so let's save this one. Save and close. Okay, so now let's go back and see the average price for this one now. Right click this one and edit item. As you can see here, on hand is now 110, and the average cost, it comes to $60.91. They give you a couple of decimal points here. So $60, let's say 91 cents. All right, so this one, it doesn't matter now, $60, or you can change it to $70. It doesn't matter, $70. So when you create invoice, it will reduce your inventory at this rate now from now on, because this is your average cost. Doesn't matter if cost, you say here $70 or $700, doesn't matter now. So you have already built the average cost in here, and you have on hand item. All right, so this is already established now. Okay, so and then say okay. All right, so now you're ready to sell your inventory item. Well, there's a graphics card in here. So customers, and let's say you want to create invoice. Okay, so we want to create a customer. Let's say it's a California technology company. California tech company. All right, so the quantity, we want to sell some graphic card. We have plenty of graphics card now. So you can see the quantity in here if you want. Say 110. The moment you click this one, this little thing here, it will show you how many units you have in stock here. Let's say at 110. All right, let's say you want to sell 50 units, and at $90. All right, save and close. Okay, so now as you can see in here, the inventory went down. So the average cost is still the same. This is not going to change until you add new purchases, and if the price different or whatever it is, it will change this one. The average cost will change. So you don't need to adjust this one. So you just keep adding, and QuickBooks will do the work for you. All right. So right here, so it'll tell you right here where you bought 10, you bought 100, and you sold 50, and 60 left. So all you have to do is come down here. Here's the graphics card item selection, and come down here and report, and quick report. Quick report for the graphics card. It will tell you right here, and it will give you all the cost and debit and credit of all those things. So it'll tell you debit means you add it, credit means you expensed it. All right. So you have still have 60 units left. Okay, so this is on the inventory side on fixed assets. Let's look at the financial side. Okay, as you can see here, you have $4,500 sales, and then $3,000. This is the cost of goods sold from the graphics card. So right here. And on the balance sheet side, you will see, so it's still $6,000 to them, and the inventory asset value is right here, 365,455. So this is on average cost. So this is your purchase cost. So purchase cost, this is your purchase cost, and so this is your asset, and you have accounts payable. Okay, so now we know how to add inventory item and how to add non-inventory item, and so we also know how to enter vendor bill. We already did enter bill, and right here, so we added inventory item, and we also added non-inventory item. So we know how to do that one as well. It's a non-inventory one. And we also know how to create invoice. So we just go to customer and create invoice. So right here, so it will tell you how many units you have before you're ready to sell it. Now it's 60 left. Okay, so now you sold 50. Let's close this one. And so if you go to the customer center, it will tell you how much the customer has the balance. See 4,500. So California Technology 4,500. Invoices right here. And so now the next step is well, this California Technology said, well, we don't need not that many. We just want to return it. We just want to return few, not all. So what do we do now? So we go to customers, and so we go to the customer create credit memo here. Create credit memos and refund. Okay. So You just use the same customer right here, and let's say the item is still the same, graphics card, and you sold it for $90. And let's say they just wanted to uh, return 10. Okay, so 10, so we're going to issue credit for $900. Okay, so now you have a RMA, so it's a graphics card, return it, whatever reason, maybe it doesn't work, you know, or they don't need that many. Uh, so, and you decided, well, okay, I'm going to take this 10 and then we're going to return it to our supplier. So this is the issuing credit memo to your customer. And so save and close. Okay. So when you create credit memo, it will say, it will give you something. So just say retain as an whatever you want to do it. So you're not going to give refund because they haven't even paid invoice. So you don't want to apply to invoice. Just retain the available credit and just leave it there now. Okay, so you got 4,500 and 900, and then you have balance of 3,600. Now you want to return a graphics card to your vendor. So just go in here and enter bill. You also owe money to the vendor too. So before you return it, of course, you call them and tell them, well, your 10 don't work or whatever. So we need RMA and go from there. Okay. So all you have to do on this one is here's the bill and here's a new one. Let's create a new one. And all you do is select credit in here. Credit right here. Okay. So at this point, as you can see here, because the 10 came back, you create a credit memo. Now you want to send it back to a supplier, and you'll see the credit in here, graphics card, and 10 in here. All right. So they will tell you, well, we're gonna give you $70 credit or $60 credit or whatever it is. So you got to use it here. Or they say, well, we're gonna give you $60 credit. So $600. They're going to give you $600 credit for that one, and the reference number could be the vendor. Vendor will say this is your RMN number, or they may just say, well, this invoice reference the invoice, so you can just reference the invoice number, whatever it is, and you select the San Diego PC supplier like this, and save and close. Now, as you can see, if you go to vendor center, you will see same thing like in here. As you can see here, you got the RMA credit in here. So this accounts payable is kind of a negative way of looking at it. So it is $600. All right, so that's how you handle vendor uh, inventory returns. All right, so the next one is you may not need it, but if you do some assembly thing, you buy certain parts and you do some certain assemblies and then sell it. All right. So in order to do that, we have only one inventory part in here. So you need add a few more. Let's just say we're going to add one more in here. So we do this inventory part, and let's say we just want to buy CPU. All right, and I'll say we're going to buy for 170, and we come to the same, and I'm going to sell it for 200. Okay. So at this point, you don't have any inventory. Just add some inventory. Just buy it. Vendor interbill. This is CPU, display 25. Alright, so vendor bill number and send close. Okay, so now at least you have two. Let's add one more. Let's just say you want to add computer case. Let's say cost for this one, I'll say $60, and you're gonna sell it for 90 bucks. All right. Okay, so now this you have three parts, three inventory parts here. So if you want to assemble it, we're gonna buy this one too a little bit. Let's do this one. All right, we'll just add to the previous one. Not this one. Not this one. Okay, we'll just add a new one. So the computer case. Say we're gonna buy 50 of this. Okay, so now you have. Oh, we use the credit one. So okay, vendor intro bill. Let's read this, not the other way. Okay. All right, so you have a computer case, CPU, and graphics card, and so you just want to assemble and bundle it and sell it. All right, so let's right-click again, new it, and inventory assembly right here. Just click this one. Okay, and so let's say that you want to bundle it with three parts. You want to bundle three parts. So you come here and computer case, quantity one, computer CPU, quantity of one, and graphics card, quantity of one. So like this. So this is a bill of material cost. So this is like a separate part, and when you sell this one, basically it comes out from these three individual parts. So this is how you create assembly thing. And so this one could be more than one. So it could be two. This could be four, or this could be five. So whatever it is, so this is how you bundle it, and the price will change, of course, in the material thing. All right, so you can create a sales price in here. Let's say $1,000. Okay, income account, the same account, like this one. So you don't have anything in here, but you have established the price here, and then what you need to do is go to vendor and inventory activities and bill assemblies. So it will tell you how many units you have in stock, and you just want to be, let's say one. There's nothing in here. You have so it will tell you, so you need 4 to build one, 2 of this, and 6 of this. And you just want to build one. Or let's say 2 if you want it. So build and close. So now, as you can see here, you have 2 units that pull out from these 3 individual items. So that's how you build assembly. And so how to do the inventory value adjustment. Uh, let's say something is wrong with the valuation in here. You don't want to do that every day because QuickBooks automatically track all your costs on average basis, so you don't want to do that. So, but when you are checking inventories and if these units are off, so you need to go in here, the vendors and inventory activities. They're right here, just like the place where we built the assembly thing, inventory activities and build assembly. So it's right here. It will say adjust quantity value on hand. So this is where you want to go. Okay, so you want to do quantity only or total value, quantity and total value. It will give you the everything in here, and you have to select the adjustment account, whatever account you want to select. You got to be careful here. They may say, well, that's not the right account, or you may say, well, okay, that's the one I want, and so select one here. The customer case, CPU, graphics card. So you took inventory and realized, well, we don't have that many. Don't know what happened. The new quantity is 41, so you lost some. You lost one here, and let's say a new quantity is 41, and this will tell you now the new valuation is this, and let's say this one is 20. We lost one. Let's say this one is 49, so we lost one again. So normally, whenever you lose something like this, the chances are when you are shipping it, you're over shipping it, or basically you mixed up. If it's mixed up, then the one quantity have higher, the other quantity will be lower. So whenever you have negative quantity in all three, that means basically you overshipped it. Somebody ordered two and you shipped three. So that's what happened. And there's not much you can do about it. If the customer calls and say, hey, we received over shipping, then you can handle from there. Or nobody calls you, that means you lost your inventory and you lost your money. So you lost about $291 right here. So the moment you save and close, it will reduce your uh, inventory and you create a new inventory in here. So that's how you do it. And if you just want to do quantity, normally you don't want to do this quantity. So if you just create a quantity, you can do that too, right here. You just create a quantity in here, and it will the values to the same, still the same. And this one, you can change the new value if you need it, but you don't want to do that either because you want QuickBook to create average cost, so you don't want to do anything in here. Let's say the price went up on this one, but you still have to do it on your cost basis. So you can't mark up until you sell it. So you're not selling, you haven't sold anything in here, but the cost is your cost. So you don't want to do anything in here. So basically, you just do the quantity and you automatically calculate your value adjustment. So just save and close. As you can see here, the quantity went down, and so it was a write-off to your cost of goods sold account. So what we've got here, so it's in here. Let's see it from here. So here's the inventory adjustment right here. Normally you should have just one cost of goods sold in here. Somehow this one we created two. It was mixed up in here. So you should have just one cost of goods sold, or you can have many cost of goods sold account. Doesn't have to be one. So you can rename this and create something else. So let's rename this, and so that's what you got to do. This is on the chart of accounts. So you can see here you have two cost of goods sold account here. So let's say other material costs. So normally QuickBooks will automatically create cost of goods sold account, so you don't need to create another one. So all right, so let's see here the profit and loss right here. I will refresh. Okay, so let's see right here all the cost of goods sold. So the total is still cost of goods sold. This is a separate sub account in here, and so that's how you have to do it. And on the balance sheet, you will still see how much inventory left in here. So asset is 15,000, and you owe $12,000, and you have money in your bank account. You have AR and everything with certain transactions there. Okay, so now we know we went through QuickBooks and adjusting inventory, and let's look at the reports, whatever reports they have. So in order to look at the reports, we have to go to inventory right here. See, inventory valuation summary will give you all the details like this. And then you have what else do you have in here? The detail one. So it'll give you everything, all the transactions, what you did, transfer to build assembly and everything in right here. Assembly is right here, and the valuation is right here. So it gives you very good detail what what you have done so far. Okay, and then uh, so this one you can just tell stock items by items like this. So we haven't done any purchase order one, so you can see purchase order. It will show how many you're ordering and what's the next shipment due and uh, ETA and everything. Once you keep your purchase order up to date. So this video we're going to talk about just the inventory side. And the last thing we want to do is let's say you want to take a physical inventory at the year end once a year or twice a year. The way it was going was one unit up, so you want to take inventory every 6 months. So just print this one. It will tell you the quantity on hand and the physical count. Okay, so whenever you need to take physical inventory, you just print this and the physical count. So let's see if we can customize this if possible. Alright, let's take this one off. Alright, so now you just take the physical inventory. You don't need the preferred vendor. Take that one out. So the preferred vendor right here. So check that one. And now like this. So you don't need whoever takes the inventory. No, don't need to know the price. So take that one out. Uncheck that one. All right. So this is all you need when you want to take physical inventory by some, let's say, if you have inventory clerk or someone will do this count. So if you have a count, then you know what the count is. So that could be biased. So just do the physical count. Just print this one. You can just print it, and then uh, just get the physical count manual. You can download to Excel, whatever you want to do it. Excel right here, and then print it. And you may want to make the row a little bit bigger because not enough space in here to write physical count. So once you have this, and then basically you come back and go back to the same place, inventory activities, and adjust quantity value on hand like this. So this is where you make the changes again. And when you take the physical inventory, make sure before you make that adjustment, make sure you have enter all the bills. Sometimes what happens is you received certain parts, and you haven't entered the vendor bill, and someone took the physical inventory. Of course, it's going to be higher. So you just enter, well, we got more inventories now. Well, the reason is you haven't entered your vendor bill right here, the vendor bills. So before you make adjustments uh, for your physical inventory, make sure you have entered all your vendor liabilities, vendor bills for the inventories, uh, and then you come out okay. So we went through this and review inventories, and I think we cover everything you need to know about the inventory stuff. Uh, and if you have other questions, you can always visit our website. It's new QuickBooks, newquickbooks.com. And by the way, on New QBO, if you have QuickBooks Online, we have another website, it's newqbo.com, very popular. We have all kinds of visitors from all over the country, all over the world actually, from over 100 countries. So you can visit newqbo.com for QuickBooks Online, and New QuickBooks for QuickBooks desktop version. Is it Pro or Premier? Doesn't matter. So thanks for watching, and we have all kinds of videos uh, related to QuickBooks 2015, and just check it out. Thank you. Bye.